Unit 1. Types of business entities. Under the Companies Act, a company is a legal entity that independently carries out a profitable activity on the market as its exclusive activity. A legal entity can be organized in one of the following forms: as a personal company, or as capital companies. There are 6 different types of profit-making companies in Slovenia. Most of the companies in Slovenia are established in the form of a limited liability company, DOO. The majority of foreign investors also choose this form. A sole proprietor, SP, is also a common form, however, it is not a legal entity. Throughout the module, we shall focus on these 2 most common forms, while information on other forms of business entities can be found in Annex 1.1. A sole proprietor is a business entity, but is not a legal entity. It is a natural person who performs a profitable activity on the market. He is taxed with income tax. A sole proprietor is a self-employed person who does not pay salaries, bonuses or other bonuses to himself that would otherwise belong to regular employees in other forms of business entities. Although he must be included in the compulsory insurance system, he is not employed in his business entity and therefore cannot claim his salary as a cost. In this form of business, it is interesting to know that a sole proprietor can freely dispose of earnings and can transfer it to personal consumption whenever necessary. However, he is responsible for his business operations with his entire assets, which in the event of bad business poses a risk of losing personal property. Running a business as a sole proprietor is easy as it only requires the management of basic accounting records and compliance with the rules that apply to the charging of services. Although the establishment of this business entity is simple and, in principle, there are no specific limitations for setting it up, certain persons cannot register an SP. These are persons who have been included in the list of tax reports non-submitters or non-taxpayers for the last 12 months. Persons holding a share of more than 25% of a company, published in the list of tax reports non-submitters or non-taxpayers for the last 12 months. Persons who were involved with more than 50% of the direct share in the capital of a company which was removed from the court register in the last year without liquidation on the basis of the Financial Operations Act, insolvency proceedings and forcible winding up. Persons who have been fined twice in the past 3 years with a final decision of the Labour Inspectorate of the Republic of Slovenia or the Financial Administration of the Republic of Slovenia in connection with an offence pertaining to work and illegal employment. Persons who have been bindingly convicted to a prison sentence for certain criminal offences listed in Item 1 of the first paragraph of Article 10 as of the ZGD-1. This type of business entity is worth considering if the future business does not pose a risk to the loss of an entrepreneur's personal assets, in case of a lesser planned annual turnover, for example up to €50,000 per year, or if the business activity will be simple, for example renting a property or intellectual services. Under certain conditions a sole proprietor can opt for flat rate taxation. In this case he is not required to keep accounting books. This is also important from a tax perspective. In 2018, this option can be selected by sole proprietors who have no employees and have less than €50,000 of annual turnover. 80% of the annual turnover is recognized as costs, while 20% of annual turnover is taxed with 20%. This actually represents a 4% tax on the total annual gross income. As these provisions often change, you should keep up to date and check them regularly on the website of the Financial Administration of the Republic of Slovenia. In the presented table, please check the advantages and disadvantages of this type of business entity. Supplementary sole proprietor is a natural person who is regularly employed by another employer on a full-time basis. He is therefore insured on a different basis, however, in this way he can carry out various additional profitable activities. This status enables the business activities to be carried out legally and with very low costs. Establishment of a supplementary sole proprietor makes sense when a person performs smaller scope of business activities in addition to regular employment, for example renting out a real estate. Legal status, rights and duties of a supplementary sole proprietor and a full sole proprietor are the same. However, there are some differences. Supplementary sole proprietor is fully employed full-time by another employer. The types and amount of social contributions are different. Supplementary sole proprietor only pays a lump sum contribution for insurance against injury at work and for occupational diseases according to ZPIZ-2 and ZZVZZ. The total sum of both insurances combined in 2018 amounts to €67.38. Up-to-date information can be obtained from the website of the Financial Administration of the Republic of Slovenia. Supplementary sole proprietor is usually created by those who are not satisfied with work or earnings in their regular employment, or are interested in entrepreneurship and want to start their own business without great risk. Supplementary sole proprietor is the most appropriate business form for someone who is, for example, renting out a real estate. By registering a status of a supplementary sole proprietor, the person is taxed lower than if he was renting the same real estate as a natural person without the status. It is also suitable for other afternoon business activities, if they are not prevented by an individual's employment contract. Limited liability company is a legal entity the founding capital of which consists of the founder's contributions. Founding capital must be at least €7,500, as defined by the Companies Act, ZGD 1. A limited liability company may be set up by one or more natural or legal persons. The value of a founder's contributions may vary, however, the lowest contribution is set at a minimal amount of €50. Contribution can be in cash or provided as an actual input or actual takeover, for example investment in the form of real estate, movable property, rights, business or part of a business. Unlike sole proprietors, limited liability company founders are not liable for business activities with all their assets, but only with the capital of the company. Among the founders of a limited liability company, there must be at least one shareholder and at least one managing director. It is not compulsory for either of them to be Slovene national and or to reside in Slovenia. The shareholder and the managing director may be the same person. Relations among founders are set up by the Founding Act. Establishment of a limited liability company is very safe from the point of view of protection of personal property. This is very important when there is more than one founder, as wrong business moves of the influential founders harm all the other ones as well. In the case of a one-person company, it is worthwhile to evaluate all the effects of different business forms and to decide whether it would be more appropriate to set up sole proprietor or limited liability company. Take a look at the presented comparison of the two business entities. You should have it in mind these advantages and disadvantages while you are supporting each individual potential investor.